Welcome along to the deep dive. We're here to, cut through the noise and really get to the heart of things. And today, our focus is squarely on risk management in trading. It's one of those things that's often misunderstood, but honestly, it's absolutely critical if you're serious about the markets.
Yeah, it really is. And it's funny how many people see risk as just this bad thing, something you've got to avoid completely.
Right.
But let's be real clear. Without taking some risk, there's just no reward.
Yeah.
Right? Think about it like skydiving. Super thrilling, yeah.
Right.
But you never jump out of that plane without a parachute. Risk management, that's your parachute in trading. It's what keeps you playing the game.
That's a brilliant way to put it. A parachute really drives home how essential it is. Which kind of brings us to our mission today, doesn't it? We want to help shift your mindset. So you start treating your trading account less like, I don't know, a slot machine for quick thrills.
Yeah, exactly.
And more like something valuable, something you need to protect and, grow using proper disciplined risk management.
Absolutely. And connecting that, to real life. A lot of us learn these lessons the hard way. I certainly did. Early on, I made this classic mistake. I went 50%. 50% of my entire account on one trade. GDDJPY.
Wow. 50%.
Yeah, just because it sort of felt right. And the killer part, no stop loss, none. So no preset limit on how much I could lose. Woke up the next day, margin call, broker demanding more cash because my losses were just, painful, but definitely defining.
Oh, I can relate. I've definitely had my own version of that painful lesson. For me, it was usually emotion-driven. My big one was revenge trading, after a pretty bad loss. Instead of just taking the hit, I doubled down, put even more money on the next trade, trying to win it back fast.
Always tempting.
Always disastrous, lost double, predictably. That's when it really hits you. The market just doesn't care about your feelings at all.
Exactly.
And emotions, they just wreck your strategy completely. Yeah. So true. Which, leads to the big question. How do you actually fight those urges, those really strong emotions? It comes down to rules, clear rules, ones you just don't break. For me, my absolute core rule, learned the hard way, is never risk more than 1% of my account on any single trade.
Just 1%.
1%. And it's not just some random number. It's like, it's your survival pact. You have 10 losses in a row. Okay, it hurts, but you've still got 90% of your capital. You're still in the game.
That's huge.
It's the power of maths over impulse, really.
That 1% rule sounds incredibly solid. But tell me, how do you actually stick to it psychologically?
Yeah.
Especially if you've had a few losses and suddenly you see what looks like a perfect setup.
That's the discipline part, isn't it?
Yeah. For me, alongside something strict like that 1%, I have a couple more. Like, I only trade setup I've actually backtested properly. I need to see the stats, know it has an edge historically.
That's smart. Data over gut feeling.
Exactly. And two others. Absolutely no FOMO, no fear of missing out, and definitely no chasing green candles. Those big, fast spikes up. Oh, yeah, the panic buying.
That emotional chase. That's where so many people just mess up.
And everything we're talking about here, these painful lessons, needing these strict rules, it all points to this big shift in how you need to see risk. It's often really misunderstood. So many people think high risk automatically means high return.
Right, that common myth.
But the truth is, the really successful traders, the pros, they aren't actually risk takers in that wild way. They're meticulous risk minimizers.
Risk minimizers, I like that.
Yeah, their number one job is protecting their capital because, you can't play if you've got no chips left. Focusing on limiting the downside, not just swinging for the fences on one trade, that's what leads to consistency over time.
That's such a critical distinction.
Yeah.
So let's bring this home for you, the listener. What does this all mean for your trading? Think of risk like fire, okay? When it's controlled, managed carefully within set limits, it can power you. It can generate profit. It's an amazing tool. But when it's uncontrolled, when you let it rage, it burns everything down. Total destruction. So, thinking about that fire analogy, let's get real practical for you right now. Are you actually consistently following your risk rules?
Yeah.
Or are you, maybe, just kind of winging it sometimes, relying on hope or instinct instead of a solid plan?
And the only way to truly know the answer to that, you need a trade journal, a really detailed one. You've got to track every single trade, not just win or lose, but know your numbers. What's your average win? What's your average loss? What's your actual win rate?
The hard data.
Exactly, because the numbers don't lie. Emotions, they lie all the time. That data, that's your honest feedback.
And remember, the ultimate goal here, it sounds almost too simple, but surviving the game is winning.
That's it.
If you can just stay in the market long enough, manage your risk day in, day out, your edge, whatever strategy you're using, it will eventually get the chance to play out and pay off.
So, yeah, the key takeaway: control your risk. Don't let it control you. It's a tool, a powerful one. Use it wisely.
Okay, so here's a final thought to mull over this week. If surviving the game really is winning, what specific piece of data from your own trading journal could you dig into right now, this week, to truly understand your edge better and make sure you stay in the game longer?
Something to think about. Until next time.